Thank you, our viewers, for joining us. I'm Karagab Baldwins, and we're coming to you live from the Campus International Conference Center. It's been a sad story to hear that there's an accident that has happened, and our condolences go to all the bereaved families and friends. So, we're going to talk about business, a phenomenon that is very critical about insolvency and how to rescue businesses. Before we go into the main discussion, let's have this preface just to build up the overview of what we're going to talk about.
We live in a society where the overwhelming majority of companies rely on the credit market as a source of finance. Such dependence creates a double problem where companies may struggle to survive without access to credit finance, and those who facilitate the use of credit risk not being repaid. In such circumstances, there's necessity to have a legal framework, usually referred to as insolvency administration, that facilitates the harmonious resolution of such likely pitfalls and permutations. Insolvency proceedings generally include all processes that may be commenced under the Uganda Insolvency legal regime by or against a company, including voluntary arrangements, administrations, receiverships, and winding up or liquidations, as well as bankruptcy for individuals. Globally, Uganda stands at position 113 in the 2018 Ease of Resolving Insolvency World Bank Ease of Doing Business report ranking of 190 economies, a drop by 2 positions comparing with the 2016 ranking. The World Bank advises that a robust bankruptcy system in any given economy functions as a filter, ensuring the survival of economically efficient companies and reallocating the resources of inefficient ones. Fast and cheap insolvency proceedings result in the speedy return of business to normal operation and increased returns to creditors. In Uganda, we have the 2011 Insolvency Act, and Section 198 of this Act mandates the Minister of Justice to appoint an official receiver of ailing or failing companies, in this case who is the Registrar General that apparently runs the Uganda Registration Services Bureau. NTV, in conjunction with Ursb, gladly bring to you this discussion on the insolvency and rescue mechanisms of struggling and failing businesses in Uganda. You're welcome.
And indeed, on that note, I just request you, if you're on social media, on your Facebook or Twitter, just go onto our handles and engage with us concurrently in this discussion. I know it's a Friday evening, but let's get this done. We get to understand these concepts and how a business which is facing a serious shock or perhaps a failure probability can be helped. And in studio, I have the expert who is actually handling this very specifically, and he's from Ursb. He's Mustafa Antali, and he's the manager of liquidation unit, Ursb. Mustafa, you're welcome.
Thank you very much.
Yes.
And good evening to all our viewers.
Okay, so let's first understand.
Yes.
Of course, the Insolvency Act 2011, in its introduction, states that the Act is to provide for receivership, administration, liquidation arrangements, bankruptcy, the regulation of insolvency practitioners, and cross-border insolvency, to amend and consolidate the law relating to receiverships, administration, liquidation. Just a repetition of these concepts. So help us just clear out these particular concepts, the issue of receivership, of administration, of liquidation, bankruptcy, and insolvency. Pretty many concepts, but I believe he's going to help us just to understand them.
Thank you very much.
So receivership, administration, liquidation, bankruptcy, and insolvency.
Actually, I'll start with the last one, which is insolvency.
Which is a major focal point.
Yes, because it is broad and accurate to cover all those other concepts which you have mentioned. Now, insolvency means the inability of a person to pay his liabilities as and when they fall due. When that happens in law, we say that you are technically insolvent. Of course, the Insolvency Act gives some indicators as to what will constitute insolvency. For example, if you fail to satisfy a statutory demand, if you fail to comply with the statutory demand, if a creditor is demanding money from you, and he issues a statutory demand, and you fail to pay within the prescribed time, or you fail to apply to set it aside, in technical terms, that's an indication that you are insolvent. Or if a judgment date, you have a judgment date, is judgment against you in court, and execution proceedings are commenced, and the judgment date is returned unsatisfied, that is still an indication that you are insolvent. All where all your assets or substantial or a substantial part of your assets actually under the control of a receiver or any other person who is enforcing a charge against the company, that's a clear indication that you are insolvent. So those are some of the indicators which appear under the Insolvency Act as examples of acts of insolvency. But of course the Act is very clear that those are not intended to be exhaustive. They are just indicative of the fact of insolvency. But generally I would say that insolvency is your inability to pay your debts as and when they fall due. Of course, now receivership, administration, liquidation, bankruptcy, they are all consequences of insolvency. If you are insolvent as an individual or as a company, then you can take one of those options depending on the circumstances, and probably then I can explain what liquidation is.
Especially the one you do.
Liquidation basically means the conversion of assets of a company into liquid form, as
into
the word monetary form.
Cash,
as the word suggests, liquidation. So it's basically converting these physical assets you are seeing into liquid form, into cash form.
Administration.
Before I move to administration, liquidation, of course, in some cases we use it quite interchangeably with the word winding up. Winding up itself is closing the operations of the company.
So winding up. If I have cars, if I have buildings, if I have all these things that support business, if I'm insolvent, then in order to pay off my debts, you go and make sure that you convert the cars,
into
the buildings into cash.
And then that's what you dispute to your creditors. So liquidation is a necessary process in the winding up process. So because winding up, you are closing down the operations of the company, and that would inevitably involve conversion of the available assets into liquid form for distribution to the creditors. So that's basically liquidation, and in most cases it applies to companies. Now, administration, as probably we'll discuss at some time to come, is basically a rescue mechanism. If a company is in financial difficulties, instead of that company winding up or closing its operations, the company makes a settlement with its creditors. It says, this is the state of my affairs. Right now, I cannot meet my obligations as and when they fall due, but I have a plan. I have a plan on management of your claims. Give me time as I sort out myself. Basically, what will happen in practical terms, the company will first apply, after passing a resolution that they should embrace administration, they apply to court for what we call an interim protective order. It is usually in force for not more than 30 days. Then when court issues that interim protective order, within that period, no creditor can commence proceedings against the company. Within that period, the company will call a creditors meeting where it will present its proposals. Proposals which actually should make sense to the creditors, because if they don't make sense, the creditors are at liberty to reject those proposals, and the company then will slide into liquidation. So it will be like a strategic plan, which is going to drive the company from where it is to its new horizon.
And we'll get into detail of that. Just tell me on bankruptcy, because personally I don't know.
Bankruptcy in most cases,
insolvency, I would expect that it's almost the same.
Bankruptcy in most cases we use it in relation to individuals.
Insolvency is for companies.
Insolvency is broad. It covers both individuals and corporations. I mentioned that liquidation, administration is basically for companies. Now bankruptcy, and then what we didn't mention, what we call arrangements.
They
are the ones which apply
mentioned
to.
At least it's in the act. Okay, so now let me just get you the facts. The Uganda comparator, rather. The comparator economies ranking by the ease of doing business, resolving insolvency. Actually, there's a ranking. We did the first discussion, I think, on the 4th, and it ranks. Uganda is now scored at having got, I think, 113 points. No, 38.94 points. That is percentage performance in insolvency practice, and it's 113th out of 190 countries. So quite a slump, because in 2016 it was 111th. Not pretty much of a big difference. So help us understand how the insolvency law is built in Uganda briefly, and how come actually we also had a slump in our performance in the insolvency practice?
Now, first of all, the insolvency regime in Uganda is designed to serve both the creditors and at the same time the debtors. So it's a law which actually balances interests in a situation where actually the conflicting interests ought not to coexist. Because the creditor is interested in his money and the debtor is also looking for protection. So the role of insolvency law is actually to strike a balance on how to serve the creditor's interests, but at the same time maintain the interests of the debtor, especially in terms of survival and continuity. Because insolvencies, we are looking at how do you rehabilitate you. It's not about squeezing whatever you can squeeze from a person, but how do you also ensure that he survives. Now, when you're looking at the World Bank rankings, you also need to understand where Uganda was before the...
Yeah, it was actually 111. Yes. Now you're being ranked 2 positions falling down, because which is 113. Yes, the good news is that the general regional performance, because is also poor, because Rwanda was 73, in position 73 in 2016, it is now 78. South Africa was 50, it is now 82, meaning South Africa is far worse in business practice. Then Kenya was 92, by then it's now 95. So there is an entire sub-Saharan regional trend that is really getting slumped down on.
Of course, that one you also need to compare. It's a competitive environment. It's it's not only Uganda, which is, so you reform your processes. Even your colleagues are reforming your processes, so you may not expect to maintain a similar position throughout the years. But of course, the factors which contribute to those positions are very well known. Even in the World Bank reports, they are very clear. How is it for a business to exit? How costly is the process? We are currently improving our processes in terms of insolvency. We have done already some legislative amendments and developments. There are some laws which have already passed. So I believe this year's rankings will significantly improve. But of course, that is the shift in positions basically because of competitive environment which we live in.
Now, just there is a disregard. Some people actually are disputing the necessity of insolvency management. You know, and saying that this is just a government excuse to have some work to be done. In the research paper done by Waiswa Abdul Salam from URA, I think he was doing his dissertation at university, and he says, whereas it is generally acknowledged that insolvency proceedings are a collective debt collection mechanism through which an insolvent debtor's assets are pulled together for the benefit of all the creditors, some creditors have over the years been using insolvency proceedings to collect their individual debts. So there is an abuse of the process, both of course by government. Perhaps some people think that government at times can go after a company, perhaps just in the background bring it down, but also the people who are running companies can, if they fail to collect their debt, they use the government arm to collect those debts. So we want to understand what really Ursb now does in this particular practice and how it manages all these conflicting problems. Yes.
First of all, allow me to clarify that government does not in any way focus on failing businesses. In any case, I must say that there is a policy shift currently to focus on revival of businesses. I think that is evident from Uganda Telecom. That's one of the companies which probably could have been left to...
But you know that it's a Uganda, rather it's a national parastatal, so you can... of course, you know I don't want to trap you into that. Okay, so let's talk about the trappings of those kind of conflicts that can come in either by a person who is failing to...
Yes, of course, as I mentioned earlier, that the law on insolvency is basically about balancing interests. And the creditor, of course, is at liberty. I think I didn't get the opportunity to probably to explain that very well. But insolvency proceedings can be commenced by the debtor himself or by the creditor. So if you realize that you are not doing well financially, you can choose to go to court and get protection at the earliest stage possible. But also in situations where you are hesitant to do so and the creditor reasonably believes that your continued trading is causing more harm than good, that creditor is justified, as a matter of right that is granted by law, is justified to go to court and file for insolvency. A creditor can petition for winding up of a company as a creditor. He can also petition for you to be declared bankrupt Why? Because yes, he's an interested party. You can't.
Yeah, and we'll come to that because I know the trickery behind it is that some banks actually force certain particular estate holders or business interests, and they feel they want to just boot them out of the system of business, and they give them these toxic, perhaps credit. And they know for sure that this person cannot pay back, but the long-term interest is to grab their land, to grab their assets, which is not your problem. So just let's talk about just shortly about a few minutes about the official receiver, because that is the actual direct office function under Ursb. What does the official receiver particularly do in this particular regard?
Official receiver, of course, as you highlighted in your the clip which you played earlier, which was accurate actually. The official receiver as an office is established by under the Insolvency Act, and it clearly states that the official receiver is to be appointed by the Minister of Justice and Constitutional Affairs. In this case, the Minister appointed the Registrar General as the official receiver. Now, clearly, in the same way, the mandate of the official receiver is spelled out under the Act. We are basically the regulators of insolvency in Uganda. We administer and investigate insolvent estates. Of course, administration, when I talk of administering insolvent estates, the examples are very many. I earlier told you about Uganda Telecom, Uchumi supermarkets, Nakumat supermarkets. All those companies are being handled by the official receiver. Then our mandate also extends to regulation of insolvency practice. Prior to the enactment of the Insolvency Act, probably everyone could qualify to be an insolvency practitioner. You could, if someone wanted a receiver, the law did not prescribe qualification requirements, so anybody would handle an insolvency case. But with the enactment of the Insolvency Act, now insolvency practice is a regulated profession, such that the Act prescribes who qualifies to be an insolvency practitioner. In very clear terms, it says must be an accountant, a lawyer, or a chartered secretary who is a member of a professional body and at the relevant time has professional indemnity. Now, the official receiver is responsible for regulating the entire profession, the entire insolvency practice in Uganda. Currently, we have passed the regulations, insolvency practitioners regulations, which require all insolvency practitioners to register with the official receiver. Okay, so
just on that note, definitely we'll come back, hopefully but it's quite explicit. She's the one who handles the insolvency,
largely regulates.
Okay. I think there needs to be clarity that who other people do the insolvency practice itself. So when we come back, definitely perhaps you add on that. But I also need to understand, can there be a preemptive engagement by Ursb to a business which is failing in order to help perhaps if not get it into a failed state? And thanks our viewers for keeping with us. Let's have just this commercial break. We'll be back and continue with the discussion. Thank you.
So this
Thank you for coming back. And on social media, I have really a voluminous response from the respondents, from you, our viewers. And we posted two questions. One is, do you think the government should actually, does the government have an obligation to help businesses which are failing in Uganda? And then the other one is, how do you think they should? And let me just get some responses as they've come in. I can see Dexter Pato says that, first of all the big businesses belong to the president and his colleagues. There is no investor in Uganda apart from Aga Khan. The rest is Museveni and Kam. Okay, that is pretty, really an opinion that is subjective, or perhaps he has his own grounds of facts. Then Mpaji Moses says, yes, I think the government has the obligation, because if businesses fail, that means that people in those businesses will lose jobs and hence turn into criminals, which will cause insecurity in the country. Just as of now, the economy of the country will be also failing down more, especially in infrastructure development. And then last two more, Charles Odeke says that I have no doubt, because if taxation is high, honestly, what do you think? A poor man suffers. Pretty nebulous response. Ebony Chabakama, it should be having the obligation because it gains from the same businesses, but it's instead the opposite here in Uganda. So thank you for those responses. Keep them coming, and I'll keep on citing them as time allows. So, Mustafa, you can hear what the response out there. Now, are there mechanisms that, okay, probably generally the government, but also Ursb, besides coming and doing a post-mortem kind of funeral service, you know, arrangement to bury the business, are there certain things that the government can do or Ursb can do to help preempt or to avoid actually the closure and the death of the business? Yeah, sure.
From our mandate, of course, I mentioned that we also do advisory services, and of course, our services are free. Usually, if a company is about to fail, we normally get some information pointing in that direction. What we normally do is to invite, we normally summon the directors, and we require them to give us their statement of their accounts and how their financial standing. Usually, if the company is actually doing badly, that's when we start, even before you think of, probably the public knows about it, that's when we start telling them on how to, when they tell us what strategy they have put in place, and if there are no clear strategies, then they advise accordingly on probably going for administration. I will not give examples of such companies which we have summoned, but I can confirm that there are more than 3 which have shown signs of failing, and we actually summon them to our offices and we advise them accordingly.
But as a matter there is evidence of our companies, so you shouldn't really hide away from that, because in 2016, let's say, just more elaborately, there's a list that came out: WBS, African Minerals Limited, Imperial Hardware Limited, Mubende Parent School, No Plan Build Technical Services, Concern Global Markets, many businesses, Spencon Development Company Limited. So they're just a multitude of these companies which are out there. So don't worry. We can list them because this is public information.
Well, I'm not so sure whether that it is actually public information.
Okay.
But I would think, as an office, if I summon someone and we discuss business on how to deal with the situation, I think at the same time it will not be appropriate if I come here and I say I called so and so and this is what I told him.
No, for us we have this information out there.
So for you, a journalist, so we are really in different positions. But I must say that as a matter of law, we do not have, as of now, legal mandate to forcefully probably take over a company because of its financial position.
As to help it to
our duty is largely, our mandate is largely advisory. We do not have right now legal mandate to take over a company and probably close it or put it under administration.
Okay, so
but of course, I'm also aware that under the law, the moment the company is insolvent, for example, if we summon them and we establish that it is insolvent, legally speaking, if they continue to trade, it's a criminal offense. Legally speaking,
if it's insolvent,
yes, it is an offense. It is an offense for you as a director of a company to allow it to continue trading when you are aware that it's actually insolvent. Why? Because you are creating more liabilities, exposing more people to losses by your actions. That's why it is just a criminal offense, but it does not necessarily mean.
But you see, you are unaware, and unfortunately, in the general legal context and the taxation propositions which are being made, the government itself is comfortable with ailing and perhaps unprofitable companies, that it will even tax them when they're unprofitable. I'm just giving you that as information. Perhaps that is so that is a contradiction. The practice is that if you're insolvent, you should perhaps be closed out. It's a criminal act to continue being continue. Okay, just let's get into the business actually. So how does somebody apply for bankruptcy? How does a company apply for insolvency? Just the procedures, a few of them, and then
as I mentioned, for bankruptcy, it applies to individuals and it's a very simple process. You get what we call Form 2 from the insolvency regulations, and then you fill that form.
So I'm broke. I don't have money on me. I'm struggling to go by. I come to Ursb and file for bankruptcy.
Bankruptcy, actually, the bankruptcy order comes from court, not from Ursb. You must petition court for bankruptcy.
No, but most of the people in our population are bankrupt, boss.
Now, the law is very clear. The law is very clear. You want to be adjudged bankrupt, it must be by court order. As the official receiver, that mandate is not ours.
So the process is initiated from court.
Yes.
Then you come to your
when you file a bankruptcy petition in a court, of course, some of your creditors may choose to oppose that petition or to agree that you be adjudged bankrupt. Then, if court makes the bankruptcy order, it may appoint the official receiver as the trustee in bankruptcy. So he will be in charge of your estate. Yeah.
Just in a minute to help me clarify, because this is enjoyable. I'm feeling if I got into this situation, I should go and file for bankruptcy. So I've taken over somebody's land, promised I will clear it in this particular period of time. I've reached halfway and I cannot actually clear it. So let me run to court, tell the guys, man, I can no longer be able. Is that what you're talking about in such a scenario?
Yes. You are indebted. You feel you cannot satisfy your liabilities at the moment. You file a bankruptcy petition in a court, you are adjudged bankrupt. So what happens when the court appoints the trustee in bankruptcy? He will basically realize whatever is available and distribute it to the creditors. Now, there's what we call discharge. When he has distributed whatever is available to the creditors, and of course you have not hidden anything, then you'll apply it to court to be discharged. What that will practically mean is that those debts which remain unpaid before a bankruptcy will be extinguished, and then you will start afresh. So bankruptcy is it can be both a good thing and a bad thing, actually, because it can be a bad thing in the context of like within the Ugandan law, there are some offices which you cannot occupy if you are still undischarged bankrupt by operation of law. For example, I'll tell you that as advocates, when you are applying to enroll as an advocate, you must swear and say, I'm not bankrupt. Yes. Yeah, but as a matter of fact, a person who embraces it, instead of struggling for years and years and years with debts, and you are never out of that situation, the insolvency regime allows you to embrace the process. Let someone take charge of your affairs as a bankrupt. So that person will be the trustee in bankruptcy. Distribute whatever is available. You apply to court. You will be discharged. Basically, you'll be discharged from bankruptcy and all those obligations. Okay,
so let's talk about the company now, just shortly.
Yes, for the company, if it is to apply for liquidation or winding up, of course, it will depend on, again, its financial position. If the company is solvent, there are some companies which will choose to wind up when they are solvent. Those ones will normally do what we call a members voluntary winding up. Basically, it will start by a declaration of solvency. The directors will swear a declaration confirming that the company's assets are sufficient to cover its liabilities, in which case it's not an insolvent company. So that process will be a little bit relaxed because there's no creditors. There's nothing much to worry about the creditors. The money which is available can effectively pay them. So that's what we call a members voluntary winding up, and then they will pass a resolution and appoint the insolvency practitioner, whom I talked about earlier, a professional for that matter, who is going to handle the process, sell the assets, call for the creditors meeting, and distribute whatever is available, and then file a final report.
Then the cost. So tell us about the cost, because the
cost.
The report of the ease of doing business, insolvency rather, the ease of doing insolvency in Uganda, based on that report of 2017, it states that resolving insolvency in Uganda takes 2.2 years and an average, and rather on average, and costs about 29.5% of the debtor's estate, with the most likely outcome being that the company will be sold as going concern. The average recovery rate is 38.4 cents. So the cost sounds to be enormous, and actually it seems like you are completely making a deprivation of the person from whatever he has remained with, now, besides failing to.
The cost currently seems to be high, simply because the law does not create a distinction between solvent and insolvent companies. They tend almost to go through the same process, almost. The biggest contributors to costs, of course, I must say that those processes are costly for a purpose. For example, if you are appointed as a liquidator, you must advertise in the newspapers that you have been appointed as a liquidator, or the company has passed a resolution to be wound up. I mean, I can't do with that requirement as a regulator of insolvency practice. Clearly, if the company is trading in Kampala, it also trades in Kasese, Mbarara, Karamoja, I cannot say do not advertise in the newspapers How will a person in Kasese know that actually you're going into liquidation? So there are some costs which actually are necessary.
However, the costs are that where the official receiver acts as a provisional liquidator, you pay 1 million every 30 days.
And that is the cheapest.
Yes, and where the official receiver acts as a liquidator of the company and a special manager is appointed, 2 million for every 30 days. Yes. That is quite an enormous heck of money that you're struggling, and then I'm being charged.
No. I think
just a minute.
Let me put it in the context. Yeah. Those are the costs. What you have, the 1 million and 2 million. That's just cost to the official receiver. Yeah. I must tell you that what probably a private person would charge. I'll give you an example of Uganda Telecom. Our official receiver is the administrator of Uganda Telecom. If you are to get a private practitioner to run Uganda Telecom, the resources which have been deployed by the official receiver to run a company where the board of directors is actually not there, most of the chiefs are not actually there. You cannot compare it to just 1 million. Okay. So practically, you need to put it in. I think you need to put it in the context. So
contextually, of course, also the magnitude of the company you're dealing with. All right, just we go for a break and come back and just wind up on this and talk about a bit of if I came and I feel you need to support me, can government actually help me out, bailout? Okay. Our viewers, thanks for keeping with us this late evening. Let's go for a short break and then come back and wind up this discussion. Thank you, our viewers, for keeping with us. In the studio, and I was talking about insolvency and how do you rescue companies? What are the available mechanisms to help companies be helped out of the predicament or out of the danger dead zone of winding up? And I'm with Ms. Mustafa Antale, who is the liquidation officer at Ursb. So, Mustafa, bailout. In 2016, I can remember, there was a pack of companies, about 63 of them, and they were demanding for about 1.3 trillion from the government. Were they talking to Ursb? Were they talking to Museveni, rather the president? Are they justified, by the way, to seek for this kind of help?
I think, probably allow me to clarify that bailout is not part of our mandate as Ursb, so we don't offer financial bailout.
Let's first actually also clarify on bailout. Bailout is recapitalizing, I guess, a company which is failing.
Sure. To the best of my knowledge, that was being handled by Minister of Finance and Economic Development. So I think I'm not competent enough
to that. Do you feel it's justified? Because, as I said in the beginning, if you come on as if you're acting like a funeral service company, you simply come in to bury, and in that even process you're making money through it feels predatory. That, except, okay, if I have a problem and I'm in this state, can't there be certain arrangements that can be done? Global. Okay, let's talk about it conceptually.
Conceptual, I think bailout is not a new concept. I mean, in our years, even in the United States of America, it is actually there. There are bailouts, and times of financial crisis have hit so many countries, and they have come up with those bailout schemes. But of course, what's most important is the system which has been put in place, who qualifies to join the list, who doesn't qualify for that purpose. But of course, I'm not so sure whether Uganda, we have already put in place those mechanisms. But as I mentioned, that the most appropriate authority to comment on that would be the Minister of Finance. But in the context of Ursb, I mentioned that that was largely a policy approach. It's not a financing approach. We don't offer resources, financial resources, as Ursb to companies which are failing, but we give policy options, particular administration. Instead of closing the company, then we advise it to go into administration. Yeah, sure.
So what other options are there besides receivership, these other arrangements? How do you help out? If, because of course there's the issue of you said you advise, you do the liquidation. So are there other mechanisms?
Yes, the most appropriate mechanism is what I actually talked about earlier, what we call administration, where basically the company is at level of being wound up, but it thinks it can lead a second life.
Yes.
Usually because of the creditor's demands, the company may not be in position to meet its operational requirements and at the same time make those payments. Of course, but usually by the time it has so many payment plans with so many creditors, where it is actually failing to fulfill those plans. Now, what the insolvency regime does is to allow that company to go into administration, which will create an automatic bar to creditors' enforcement actions against the company for some time, such that the company first focuses on reorganizing itself as it is looking out for funds to settle creditors' claims. Of course, the process involves engagement with the creditors, because as I mentioned, if your plan doesn't make sense at all, the creditors are at liberty to vote that the company be liquidated. I think I don't know whether you have one of the recent examples, one of the telecom companies which went into administration by the creditors, subsequently thought that probably it wouldn't yield positive results, and they voted that let this company be liquidated. So administration basically is one. So
liquidation comes actually after another process of administration.
Yes.
Attempted different measures.
Yes, yes.
Now, yes.
So the way it works, ordinary company can choose to go directly into liquidation.
Yes.
Or it can choose to go into administration, whereby it says, this is my plan to the creditors. If you give me time and engage these stakeholders who probably get financing within this period, these are my business projections. Give me 6 months, I'll start making these payments in this, as set out in this schedule. Now, when the creditors feel that that plan is not satisfactory, that's when they can vote that. Nonetheless, much as you are talking of administration, we believe still the results will not get anything in administration. Probably it would create more losses on our part. So they opt to go for liquidation of the company. So it's basically, as an insolvency practitioner who's handling that case, you must do a clear what we call diagnostic review of the company and make an opinion whether that business has a chance of survival or whether it is just due for liquidation.
Okay, so
otherwise,
the analysis will inform what action to take. So
sure.
On Facebook, unfortunately I can't access my Twitter handle at the moment, but let me just get a little bit of feedback still on what we posted as a question, how government can be able to respond. And Charles Odeke says, Barbara Ayet says, honest government has interest in it. Implying that actually the rescue can happen when government has interest in it. Then Ebony Chabakama says that it should be having because it gains from the same. Okay, I think I'd read through this. And yes, I think the first of okay, so I'm trying to look through the comments I hadn't done. Now, just lastly, as we are looking through this, it sounds such a very sophisticated, high corporate, formal business kind of environment that you're talking about. 80% of our business entities here are informal.
Yeah, sure.
So I don't know what justification you have to go into this area, either if perhaps you're saying that it's only seeking for big business and businesses which are formally structured. So is there a way that an informal company, it comes into an area that you have to first register? How do you deal with that conundrum that most of the society that we're in, the business environment, is actually informal?
Either I think the insolvency regime is quite broad. It would cover both formal and informal businesses. If it's a formal business, I already mentioned it can go for liquidation, administration. But if it is an informal business, in most cases you'll find that it is attached to the individual who is actually operating that business. So that business may not be easily detachable from the owner itself, probably by the
person and the business are the same.
Are more or less the same. So
Yes.
either way, you can still benefit through the bankruptcy or individual insolvency processes.
Yeah.
That it may not really create a very big difference. But of course, I'm also aware at the international level, we are now discussing insolvency of small, medium size enterprises, small and medium enterprise groups. This is still at the initial stages of discussion. There's what we call the United Nations Commission on International Trade Law, Working Group 5. It is basically engaged in developing model laws which can be adopted by states. And Uganda, of course, we always represented on that working group. It's one of the topics which has been introduced for discussion and introduction and adoption in most of the countries, especially Uganda. So our current legal regime, the current Insolvency Act, I'm not saying it has a gap, because I've already indicated that either way, whether if you are formally registered, you would benefit from the options which are available to companies. If you are not registered formally and you have your business, probably you will benefit as an individual, because you and your business will be more or less inseparable. So
let's wind up in this manner. A person out there, including me perhaps, prejudicially, I just feel this is not necessary. We can actually do without this kind of insolvency management practice. Because, you know, we have so many businesses. The trend is that they are already dying. Unless you want to make business through death of businesses themselves, as Ursb. So just wind up and give us a justification on how beneficial this is to the economy, and perhaps to the individuals who get into that predicament, and perhaps where we can find you as Ursb.
I must first state that insolvency in any country is one of actually the World Bank report is very clear. If it was irrelevant, it wouldn't appear in the World Bank report as an indicator. So any investor who goes to any country would first assess the insolvency regime in the country. Countries like Singapore, Mauritius, they are growing because they have working insolvency regimes. If you look at the growth, the development of America, USA, it first developed an insolvency regime that was flexible and accommodative, so investors would get their money from United Kingdom and invest in the US, simply because the insolvency regime in the US was flexible and accommodative of the business. So we cannot estimate the role of having an insolvency regime in the country, because it is built for a purpose. I mean, I've already mentioned one. Having an orderly system in case of crisis. Number two, enabling you as the business owner to have a fresh start. Leicester Football Club. Yeah, I don't know whether we've bothered to read about. I mean, it has gone through insolvency. So last,
and then it was bought off by Thailand.
Yes, but it's one of the champion, Premier League for strong football teams. But it was in that crisis. So if you do not allow giving second chance to such companies, then you are actually suffocating the economy.
Okay, so let's see, how do we find Ursb? You are partner. We've been really delighted.
Yeah, Ursb of course is located at Georgian House, George Street. Most people call that building a Mom House, but we are located on that building behind the Central Police Station. You can find us on Facebook, even on our website, www.ursb.go.ug. And of course, you can visit us. I mentioned earlier that consultation is always free.
Okay. Yeah, sure. Stafford Antali, it's been a great pleasure indeed, running us through this kind of complex subject of business management, or of course, business environment management. Yeah, sure. Thank you, and please, we are looking forward to seeing you again. Welcome. And our viewers, thanks indeed for keeping us on your station, rather on your TV, and following us on each and every program, and keeping us as your #1 station. I'm Karaga Bodwins, and we are urging you, if you're a ministry out there, you are a department or an agency or an NGO or a company, come talk to us. Talk to our MD, talk to our sales team, myself perhaps, and we will arrange such a comprehensive discussion. Great credit goes to my producer, Idris, and Luvusi, and our technical team out there. God bless, and keep logged on to NTV.